Imagine you're standing on a beach at sunset, the waves gently washing away the footprints behind you. And in those footprints, you see your younger self, dreaming of freedom, dreaming of a future where money isn't a worry. Now ask yourself, how much money will I need to retire? Because what you really want isn't a number. It's the feeling of waking up without an alarm, choosing your day instead of being chosen by it. Let me tell you a story. Alex, a 35-year-old engineer earning around $120,000 per year in salary, investing in dividend stocks, index funds, ETFs, building a stock portfolio. He's tracking his net worth, his retirement portfolio, dreaming of passive income. One evening, he opens a spreadsheet and types 3 scenarios: retiring at 60, at 55, or at 50. In each case, he asks, what annual income do I need to cover my lifestyle without working? Let's assume he figures $70,000 per year in today's dollars. He then estimates inflation at 3% and assumes a safe withdrawal rate from his investment portfolio of 4%. So he divides $70,000 by 4% to arrive at a nest egg target of $750,000. Simple? Yes, and yet incomplete. Because the story doesn't end when the number shows up. A richer story emerges when he overlays variables: market volatility, sequence of returns risk, the difference between growth stocks and value investing, the shift from active trading to long-term investing, the role of bonds, mutual funds, hedge funds, ETFs, real estate rental properties as additional asset classes. He asks, what if he wants extra cushion, say $100,000 per year? That pushes the required capital to $2.5 million. Or what if he wants retirement at 50 instead of 60? The time horizon shortens, compounding lessens, and the target jumps higher. He realizes the number is fluid because the variables are many. Here's the compelling truth. When you truly calculate how much money will I need to retire, you're not chasing dollars. You are designing freedom. You're claiming the right to make decisions by you, not by someone else. The number is only a tool. The mindset is the engine. Because when you treat retirement as a destination, you freeze the dream. When you treat it as the byproduct of building an investment ecosystem, dividend stocks, passive income streams, a diversified portfolio, capital appreciation, then retirement becomes just another chapter in an empowered life. Alex shifts his focus. He stops asking, what's the number? And starts asking, how can I build a system so that number builds itself? He increases his contribution to ETFs and index funds. He invests in rental properties generating cash flow. He sets up a DRIP, dividend reinvestment plan, makes use of dollar cost averaging. He reduces expenses, resolves sequence risk. He uses a rule: aim for 25x expected annual expenses, which corresponds to the 4% rule. But he plans for a buffer factor of 20% extra because of volatility. So for $70,000 annual expenses, he targets $2.1 million instead of $1.75 million. That buffer gives him emotional freedom. He sleeps peacefully even when markets dip. And here's why this matters. You don't retire from something. You retire to something. If you wait for enough money without creating momentum, you'll always find an excuse. But when you architect a life with systems, an investment account, a retirement portfolio, equity growth, compound growth, asset allocation, financial freedom, you create unstoppable motion. When that motion is real, retirement becomes inevitable rather than impossible. This is your takeaway. Pick your annual income target in today's dollars. Multiply by 25. Add a buffer. Build your investment ecosystem now. Invest in dividend-paying ETFs, growth stocks, value stocks, index funds, and consider rental properties for cash flow. Make compounding your ally. Let the system work while you live. So when you wake up one day and ask yourself, am I financially free? The answer will echo, yes, I have enough. And you'll walk off into your sunset, footprints behind you already washed away, ready for whatever comes next.